Hi there, welcome to Kneppy Invest and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. It is Saturday, 20th of December, 2025. Time is currently 9 a.m. Just ticked over. Yeah, within the last 5 seconds. 9 a.m. I'm recording this video a little bit earlier than I usually do, just slightly earlier. There is a reason behind that. And I probably should also mention, because I haven't said this, that I am now back to running almost every single day, which I was doing before I went on my overseas hiking trip. And I have a feeling, just a feeling, don't confirm this, this is not a confirmation, that you use different muscles when you're hiking versus running. Because when I came back from my hiking trip, and I did not run one single time over there, and when I came back from a hiking trip, I found it running more difficult, more strenuous on some of my muscles. And it has taken me about a month and a half to get back to where I was before I went on my overseas trip. So I went for a long run on Thursday, 22 kilometers, and I felt so good. Oh, I don't know what it is. I just feel so good, particularly after doing a really long run, like 22 kilometers. I feel good for about 2 or 3 days after it. Anyway, so went for a long walk yesterday. Wasn't sure how my legs would back up. They actually felt quite good. And today I went for a 10K run. So I might be doing long runs at least once a week. Hopefully twice a week, every 3 days or so. Anyway, most of you don't really care about my running, and you only care about me answering your questions and replying to your comments. But I usually answer your questions and reply to your comments in chronological order, starting with the earliest one. But I'm going to do something a little bit different today because I want to give a plug to my membership. You can become a member of Kneppy Invest on YouTube and get members only videos. So Raining Socks yesterday mentioned that they signed up to my membership and then asked, has there only been one members only video so far? Thanks. And the answer to that was, at this point in time, yes, but now it's 2. So let's have a look. It was supposed to be 3. So the first members only video was released last week. 8 stocks Macquarie says are buys. And I was supposed to release a Livewire article reaction, but for some reason it was sent out as public. And I figured out why it was sent out as public yesterday. Figured it out. And today, this morning, about 6 a.m. maybe, would have been about 7, 8 a.m. Position of my trades, 19th of December. So this is something I've been thinking about over the last few days. What could I do or release as members, sort of like a series of only for the members, only for members. And this is what I'm going to do, I think. Look at all my trading, position of my trades, why I bought, this position, why I sold out, and not only for my trades, but also for my longer term positions in my super. So for instance, the last position I took in my super was James Hardie. Why did I buy into James Hardie? Anyway, so I just want to give a plug to my membership. These are sort of videos you might be seeing. No, not might. You will be seeing in the future. And I'll probably release these sort of videos maybe once, maybe even twice a week. Yeah, so position my trades and might do just standalone videos on just one trade. Why did I buy into James Hardie? That sort of thing. So, and then other videos, reaction videos, that sort of thing. Non-member only videos will be just ASX daily rundown videos, these videos, the answer reply videos, and then a technical update. So only one video a day for non-members. And yeah, so sign up. Sign up. It's quite cheap, I suppose. Anyway, let's go back to answering your questions, because I do go in chronological order. And the reason I do that is because, or you can actually sort this by newest. So you can actually sort it in chronological order. So let's go back to, what I could have done. No, if I sort it by oldest, it's not even oldest there, most relevant. So you have to go scroll down and go to, I know exactly which question I want to, here it is. Actually, it's not a question, it's a comment from K23 Man, who says, this is a bit of a joke. Genusplus is up today because I took profits yesterday, thinking it was topping out. So frustrating. And then Gazmo says, yeah, was looking like it was going to roll over pre-announcement. I do have the chart up here, which is true. It does look like it was rolling over. Now, what I'm looking for here is a change in structure, because there was a beautiful uptrend in Genusplus share price from April through to, say, November. Share price was acting very goodly, very rightly for an uptrend. In fact, the share price was staying right above the 25-day moving average. But you can just see when the share price got to a high in the start of November, there was a bit of selling coming in. Share price dipped quite a bit more below the 25-day moving average than it has in the past, and then really struggled. The next uptick, share price did not get to a new high, and that means we did not see a new or higher high. The way I'm looking at Genusplus right now is looks like the structure is changing. So it looks like the uptrend is coming to an end. And if the share price falls below 565, I'll be selling out of my trading position. But even then, I still might be selling out because it does look like the structure is changing. Now, if the share price gets above $7, that would be a nice little breakout above the previous high. So it does look like the structure is changing, does look like it might want to roll over. And the way I might play this is just either wait for a break out above $7, and that way I'd be happy to maintain a holding, and then sell if it breaks below 565. But if it continues going sideways, then there is opportunity cost. You're holding on to a company without any gains when that money could be deployed to a company whose share price is rising. So there is an opportunity cost from maintaining a holding in these sort of plays. But at this point, I'm not quite willing to sell out. When the share price did rally the other day by 9.9%, you can see the share price actually dropping the next 5 days. So that is telling me also there's not as much strength. There's not as much buying. Enthusiastic buying is no longer there, and there's more enthusiastic selling when it comes to Genusplus. Okay, so that's Genusplus and the chart. The only thing I just want to mention here is something interesting. It's just a psychological thing. And this happens all the time, not only in investing, in life. So we remember, and this is true for me. So for instance, if I sell out a position and then the share price rallies, I go, oh, I remember that. I remember that way more distinctly than those times when I sell out a position and the share price then tanks. I sort of forget those positions. But if you go back through your history, I would say that more than often than not, maybe this is not true, more often than not, when you do follow your rules and you take profits, more than likely than not, it was the right decision. And that's the way to look at it. You tend to focus on those times when you're wrong instead of focusing on those times when you're right. You should weigh them both up the same. And I'm guilty of this all the time. We are all guilty of this. And I think this is just human nature. We tend to focus on those times when it goes against us and then ignore those times when it goes for us. Yeah, so anyway, that's what I'm going to say about that. Just remember that you're not going to be 100% right. A lot of times you're going to be wrong, and understand that a lot of times when you are right, you tend to put that aside and forget it, and just focus on the times you are wrong. And I think that can be dangerous because then you might change your rules. And if your rules are there in place for a reason, then follow your rules. And I think it's very important to be disciplined when it comes to your rules. Follow your rules. Because if you look at all these successful investors, which I will talk about one later in this video, they had rules and they follow those rules. And discipline is very important when it comes to this sort of thing, investing, trading, that sort of thing. Okay, Sensei 6011, we'll just say Sensei. Thoughts on 6-year chart of Mader Group. What is so special about this Perth, WA-based company that has gone from 5 cents early October 2019 to 963 end of October 2025? That is 103 multiple in only about 6 years. 100,000 invested in October 2019 is now $19 million. I saw this and went, Mader Group was never 5 cents. Mader Group was never 5 cents. And then I confirmed this with the chart. Well, maybe ASIC or maybe TradingView was wrong, but I never remember Mader Group being that low. Now, the share price did dip during the COVID-19. Oh, hello. Mader Group did drop below, did fall during COVID-19 to maybe 50 cents. And what I could do is confirm this with, this is ComSec, and share price, yeah, in, what's that, March? The low was 68 cents. This was in March 2020. 62 cents in April 2020. So low in Mader was 62 cents. Confirm that with TradingView. Yeah, it showed share price did drop to, yeah, about 60 cents, 62 cents. Share price opened up in October at about $1.20. So share price halved. So I'm not sure where Sensei is getting this 5 cents from. Yeah, I don't remember Mader Group being 5 cents. Uh, but even saying that, it has been impressive last 5 years for Meta Group. And this is actually, even though I never traded Meta Group, this is one of the reasons why I do sort of pay attention to recent IPOs, not within the last, say, 6 months, unless they release a really good profit upgrade or something like that. And you can see Meta Group share price did nothing for, what's that? Did nothing for almost 2 years. And then all of a sudden, share price broke out in late 2021. And this is something I'm looking for. Like I just took a position in Simmel, a trading position in Simmel, and I've taken trading positions in other companies based off what happened with Meta Group. And it does seem to work out well because a lot of times these IPOs, share price does nothing for a long time, and then the share price breaks out. And this is a beautiful chart for Meta Group for a long period of time. And it hasn't been good for a while now. Well, share price has pulled back, but it's been a beautiful chart for Meta Group. Share price now at about $7 or $8. No, 7.50. So you can see 60 cents, April 2020, now $8 or so. So it's more than a 10 bagger over that period of time. Meta Group, if you have a look, I suppose we can do this. Go to FinChat or Fiscal AI, as it's called. Have a look at some of the financials of Meta Group, and you'll probably see some pretty good growth in the company's financials. So revenue growth over the last 5 years, 26.1%. Earnings per share growth, 25.3%. Well, that is fantastic. That's the sort of growth you want, both in revenue and earnings per share. Don't really care about dividend yield. It's irrelevant for these type of companies. But what you could do is say, well, the dividend yield is right now 1.2%, payout ratio is 31%. If this company keeps on growing, that dividend yield is going to keep on going up, right? Okay. What else? Gross margins 19.3%, operating margins 9.2%. I do prefer those to be a little bit higher. So I'm not sure if I would classify Meta Group as a high quality company because of the low margins. That's just me. Return equity really nice at 34.8%, return invested capital 22.3%, 5-year average. Those are really nice. So the only thing against Meta Group in terms of it being a high quality company is just the margins. Everything else has it going for it. P ratio right now 27.4 according to this. Forward looking P ratio 22.7. That's pretty nice. So it is, I might even call this company a quasi high quality company. It wouldn't probably pop up on my, it might. I'm thinking, will it pop up on my high quality screener? Let's have a look. It may, as a market cap 1.5. Mass Group is there, Mass Group, but Meta Group is not. And I think that's because of the margins. So what I have in margins, I want at least 30% gross margins, 5-year average, and Meta Group is 19%. So if you just adjust the gross margins or what I'm looking for, Meta Group would pop up. So you could say this is a quasi high quality company. And really the returns, in fact, if you have a look at the weekly chart, we don't have as much. So with a weekly chart and particularly 200-week moving average, you need at least 4 years of history and preferably a little bit longer. The share price has remained above the 200-week moving average easily. The share price did dip back in September 2024, got close to the 200-week moving average. So if you do classify this company as high quality, maybe use that sort of strategy. If the share price does dip to say 650, no 550, that would be a buy for this company. But again, share price, based off what I did say, was never 5 cents. So I'm not sure what you're looking at, Sensei. Rupa Tor says, hi, Kneppy, with tungsten MTU price having such a strong run for the last 6 months, do you think this is sustainable? EQR looks interesting to me with a change of senior management in 2025 and their commentary suggesting both mines will be cash flow positive by the first quarter of 2026. I'm keenly waiting on the next round of financials released early next year. Would you consider the chart now, though, now warranting taking a stake in EQR? There's a couple of mentions about EQR in this video. So that was one of them. And there's another one about whether or not I took a position in EQR, because I think I mentioned it. I must have mentioned it. Hacho says EQR keeps going up. Wondering if you bought in. EQR is the only large-scale tungsten producer in Australia. The answer to that, very easy answer to that is yes. I did take a trading position in EQR. This is part of my I have 2 trading strategies now. I used to have only one. Now I've developed a second one. So my first trading position or strategy is based off lower risk trades. So this is profitable companies. This is, I'll go to it right now. Technical portfolio, I call it in trading view. Shape Australia, Genusplus, Motorcycle Holdings, Meeker Metals, which technically is not profitable, or might be profitable now. Southern Cross Electrical Engineering, Pioneer Credit, APA Group, Challenger, Clover, Cogstate, Civil Mech or CivMech, Cobram States, Whitehaven Coal, Horizon. So these are profitable, bigger companies, lower risks, potential longer term trades. Returns won't be quite as high because you don't have that risk because the valuation's probably not that different from, well, how's the best way to say it? Because these companies are profitable, you're not going to see the share price rise 500% in 1 year. Put it that way. You might see the share price rise 300% in 2 years, which we have seen with Shape Australia and Genusplus. In fact, 400% for both those companies. But you're not going to see a really significant rise in share prices over a short period of time because they are profitable and revenue making. The other strategy I have is higher risk, but higher potential returns. And that is a different, I call it small cap trades. So I have Loomis Diagnostics, Alvo Minerals, and this is a perfect example of what I'm trying to achieve. So we'll go to the daily chart for Alvo Minerals. So I just like the chart in this one. They released and like the volume. That's exactly what I'm looking for with these sort of trades. So I took a position at about, I thought it was 3.8 cents. Share price currently 9 cents over a fairly short period of time. So way more potential upside, but higher risk. And what I've realized is some of these just turn against me. So what I'm doing in this strategy is I take way more positions, but smaller positions, and then just understand that some of these are going to turn against you. So quite a few of these. And what I'm looking for is quite a few of these going up 500, 1,000%, hopefully 10,000%, and then just set out of the non-profitable ones. Anyway, so I have taken a position in EQR in this portfolio or using this strategy. And this is one of the successful ones so far. And the chart looks really good. Okay, come on. Here it is. Chart looks really good. So what I look for here is volume and bit of a shift in sentiment and trend. And that's exactly what I've seen with EQ Resources over the last few months. Massive volume coming in and the share price just keeps on going up. So happy to hold this one right now. Very happy with EQR. Anyway, so I have no idea about tungsten, and I didn't even know this company was very close to production. Had no idea. And that sometimes is true when you do trade. Sometimes you have no idea about a company. You just look in the chart, looking at the volume, and just looked really good. And I just knew this was tungsten. That's all I knew, tungsten. And there was a little bit of interest in tungsten when I did buy in. And I thought EQR, tungsten, yeah, this was a good trading position. And it's gone well. So thank you for that, Rupitar and whoever else wrote about or asked me about EQR. Okay. I just want to say thank you to D. Joe Mean D. Garden and Simon PT and K23 Men who gave me some copper plays here. So Firefly Metals and there's another one here somewhere. Who was it? Someone else mentioned me a company, a copper play. Oh, was it AI Mines or AIC Mines? Yeah, so I do have a copper watch list, which I recently developed, and I can tell you those companies in it. Where is it? Copper. Here it is, copper. So yeah, Firefly Metals. Beautiful chart, by the way. And the other one was AIC Mines. So thank you for that. I actually didn't know anything about Firefly Metals, but I did know about AIC Mines. I just completely forgot about it. Look at Hillgrove had a nice day. Chart could be looking good for Hillgrove. So I just want to say thank you to both of these gentlemen or women who told me about Firefly Metals. There was a lot going on. So Simon PT mentioned Firefly Metals, 5 thumbs up. And yeah, so thank you for that. And also Sensei gave a link in regards to Firefly Metals via Simply Wall Street. So have a closer look at Firefly Metals. Sensei also asked about Echo IQ. I first spoke about EIQ on 8th of October 2024, as you just had found out about them, and I've completely forgotten about Echo IQ since then. And let's see why. Why I've forgotten about Echo IQ. It could be just the chart. And so back then, the chart looked really good. Oh, yeah, the chart looked really good. And then all of a sudden, there was a really big down day. 19th of May 2025, share price dropped 25%. What happened on that day? That was sort of like a trend killer. It looks like 20, what was it? I've already forgotten the date. Echo IQ, was it a capital raising, 19th of May, or was it something bad? 19th of May, we'll go back 1 year. 19th of May, trading halt. They did not release anything. They had a price query. This was a share price decreasing on no news flow. Let's see what they mentioned in the price query. Oh, okay. Yes, actually, yes, answered yes to question one. So Echo IQ became aware of information concerning on 19th of May that had not been announced to the market. This is one of those situations when the company had some price sensitive information they had not released to the market. And looks like there was some loose lips. Company filed an application, blah, blah, blah. I don't really care about that anymore. So 19th of May. Yeah, so that would have been the update on category 3 CPT code application. So it looks like the market knew about that. Share price dropped, and looks like that was a shift in sentiment and the trend of the share price. Now, in saying that, that may be a bit of a shift in sentiment, maybe, but we haven't seen big volume coming in. So I would prefer some big volume coming in because it does look like the trend is trying to change. But that would be, I would have more confidence if there was volume coming in. But other than that, I haven't really been following Echo IQ since then. Let's have a look at some of the most recent reports. This has not popped on my radar. They have not released anything that has led me to have a closer look. So obviously they must not be anywhere close to, well, they're not even, they're pre-revenue. So this is a story stock. Pre-revenue is another word to say it. So they need, yeah, this could be like a stock I trade, a high risk trade, but they need to release something that would get me interested. Thank you for that, Sensei. First time I looked at that company in a while. Okay, so Trader Hooper mentioned there was a you're fired article reaction from a video released. So interesting to look back at that Hyde fired article 4 months later. It didn't age well. There were trading opportunities between then and now to make some good profits. But if stocks were bought then and held until now, most are about the same level or down. Only Pilbara and South 32, which were fired, and West African, which was hired, have done well. Probably more of an endorsement for trading rather than buying and holding. And I actually would agree in a shorter term. I believe in the shorter term, particularly in the 4 month period, trading is going to be way more successful than just holding. And because you think the company is going to be really, really big in the future. So I do think when you use a buy and hold sort of strategy, you must be thinking long term. You must be thinking 5+ years, not 4 months. And I think it's foolish to just be buying and selling just based off how you think a company is going to perform in a 5 year period, because in a 4 month period, it's just sentiment can drive the share price up and down. With Pilbara, it's just a shift in sentiment in prices in lithium, and you have to react at the time. So 4 months ago, maybe we weren't really understanding that lithium prices could go up. Same with South 32, it's taken advantage of rises in prices of the commodities and mines, and West African is going up because the price of gold is going up. So I think looking at a 4 month period is you're going to be more successful if you're trading for that period instead of buying and holding. But probably more of an endorsement for trading rather than buying and holding. I still believe that buying and holding for high quality companies for the longer term is more successful. And the reason I say that is I did research on this many years ago. If you bought and held high quality companies, you would perform better. You would perform better because instead of just trading in and out, if you just held and the share price keeps on going up, you will do better. But when it comes to non-quality companies, high quality companies, I believe trading those, you will perform better. And a perfect example of that would be Woodside. This is my favorite one. Woodside, you trade this one. You don't hold it for the long term. I don't understand why people are so really positive about Woodside. I just see this popping up all the time. But if you have a look at the weekly chart for Woodside, you just trade this and that's about it. You don't hold this for the long term. You just trade it. And I have traded this in the past. This goes back 20 years. You just trade this because if you held it for the last 20 years, you're down. You are down. So I believe there are companies you just trade instead of buying or hold and buy. And that's why I've got different strategies. Buy and hold high quality companies, trade low quality companies. And I think time frames is very important for both of those. Time frames for buy and hold, long term, 5+ years. Time frames for trades, much shorter term. That's probably the best way to answer this question or this comment. And I probably should actually have a look. You're fired, you're hired, Livewire. Let's see if we can find this one. You're fired, you're hired, Livewire. See if we can find this. I probably didn't leave a link. There we go. Oh, no, it's December. Is it this one here? This particular 30th of July. There you go. So I released this Kneppy's rundown video on the 30th of July. So that was released on the 28th of July. Let's have a look. Let's see how well they did. So Pilbara, yeah, it's done well, but because lithium prices have done well. Higher, Telstra, no, it's gone nowhere. Fire, South 32. Yeah, let's have a look at some of these for SHITs and giggles. South 32 since end of July. We'll get rid of you. We'll go back to daily. We are on daily. Get rid of you. Oh, look at that. Yeah, South 32 has done really well. Well, maybe not really well. Pilbara's done really well. Yeah, look at that. July, that was the bottom of the lithium market, looks like. Yeah. And I don't think many people would have thought that was going to be the bottom. And what else did we have here? Oh, by the way, Telstra, I think has done nothing. I don't understand that. I don't understand that pick. Telstra is not quite well. There are some people who believe Telstra is going, but it's not really. And Telstra's gone nowhere since then. Again, I think Telstra is more of a trading stock than anything else. In fact, all these companies, in my opinion, are trading stocks. Although in saying that, I have held West African Resources for about 5 years. So it's not the sort of company I would hold for the long term, but when it probably should be in my trading portfolio, to be honest with you, because I haven't found no reason to sell out of West African for this one. If you have a look at the weekly chart for West African, it's done really well. Although it was close to a sell back here, it just didn't sell. I don't know why. But I've held this one since about 2019 when I was like, I forget what I bought it at, but it's gone up a fair bit since then. So technically, West African should be a trading position that I've just held for a long time because share price has gone up a significant amount. Anyway, back to this one. You're fired, you're hired. Lorry Corp, I'm not going to have a look at that one. CSL, it's gone down a fair bit since then. Life 360's just gone nuts to fire. Okay, let's have a look at this one. I sort of can understand this one, but for me, this is more of a trading stock too. And in July, share price, yeah, it did go up a lot and then it's fallen. So that whoever was selling fire was getting out too quickly. If you go back to July, you're getting out way too quickly. Just wait for the sentiment to shift. Sentiment shifted in November. And what else do we have here? And Korea's did go up a lot and then just come back a bit. And Mr. Jennings, Megaport, and WiseTech. Yeah, WiseTech's fallen a lot. CBA to fire, understand that, and to hire CSL and ResMed. Yet again, a lot of these companies I would consider like CSL, ResMed, WiseTech, a few others here. I actually would consider high quality, but these are the sort of companies you own for the long term. And all these other companies I would just trade. Yeah. So the companies I'd buy for the long term, CSL, ResMed, WiseTech, and the other ones I more than likely would trade. Megaport, I could not consider that to be high quality just yet, even like 360, Korea, and CBA, just a lack of growth. And I'd have to buy CBA if it's cheap, and then it's only good for a trade. Okay, let's have a look at the next one. Oh, a bit of different opinions here. Just Acronym says Flight Center looks good. And then Method 341 says it looks horrible. What are you smoking? And then Just Acronym says it's breaking out, punching through resistance. And who did I agree with? I agree with Just Acronym because I am trading Flight Center. In fact, I forgot to put Flight Center into my trading portfolio. Oh, and then I didn't mention that I am trading Flight Center when I did that video last night and I released it this morning. Flight Center, I don't know. This looks good to me. I'm not sure how it looks horrible. Maybe you're looking at different time frames, but it has popped up, has popped out, popped up, broken out. I bought in on this little rally just after this rally on the 28th of November. Share price then went sideways, exactly what I'm looking for. And then the share price popped up on the 11th of December. I don't even remember what happened. For me, this is a trade. I might have considered Flight Centre to be a high quality company 10 years ago, maybe not anymore. Share price was in a long-term downtrend. Yeah, for a year it was in a downtrend. And now it looks like sentiment has just shifted. So I'm not sure why this chart would look horrible unless you're looking at different time frames. So if you're looking at the weekly chart, yeah, it wouldn't be there yet. So if I'm looking at a weekly chart, and I do, so I did sign up to Equity Story for a year, $99. And they look at weekly charts. So they look at a weekly chart and go, oh, this chart looks good or this chart looks bad. They look at different time frames. So I think it all depends on your time frame. And if I was looking at Flight Center weekly chart, I'll be like, it's maybe a bit of resistance. Yeah, a bit of resistance. And the reason I say that is, well, not there. You put a line right there, bit of resistance. The last sort of dip back in October 2024. And also the share price is close to the 100-week moving average. So you get a different perspective looking at different time frames. Daily chart looks really good. Weekly chart looks a little bit less good. NZ Hustler says, what about Xero, Kneppy? So with the recent sell-off in tech stocks, and we have seen a slight shift in sentiment on NASDAQ around tech companies, 2 really good days in a row. And this was, I think, around interest rate, or no, inflation or CPI, which I do think the market's overreacting a little bit. But also Micron results were fantastic. Second time I'll mention Micron. Let's have a look at this one again. Share price up again, about 8%. And I think very close to breaking out. Oh, very close to breaking out with Micron. Massive volume coming in 2 days in a row. So this could have been fantastic. Really good results. Not only the results, but their guidance for the next quarter just blew the market expectations out of the water. So something really positive happening to Micron technology. And maybe this is all we need for a shift in sentiment, not only for tech stocks in the United States, even though sentiment's not that bad, but sentiment is really bad for tech stocks on the ASX. And I think one of the problems is, in fact, I would say Xero has been a bit of a problem here. One of the problem stocks. They did a capital raising and an acquisition, I think. And because I do own Xero, and I did get a bit of mail about this capital raising. Was it 26th of June? Let's confirm that. 26th of June, and I just said no. I don't want to participate in the capital raising. I have no desire to add into my position of Xero. I think here it is. Yeah, Xero to acquire Melio to accelerate US growth, raises equity. 25th of June. Yeah, and the share price dropped the next day, down 5. And that was sort of the shift in sentiment. Even though it wasn't a trend killer event based on the 1-day candlestick, that was a shift there. The share price was in a nice little uptrend before then, got to a record high, and that particular acquisition and capital raising has set the share price down a fair bit. And I did not want to participate in the capital raising because I thought the valuation of Xero was a little bit too high. But it's getting to the point where I'm saying, because would consider Xero to be a quasi high quality company. I think it's getting there. I'm not sure if it's there yet, but it has the makings of a high quality company. And so this is one I want to own for the longer term. Now it's getting to the point where I might even add to my position because the share price is now below the 200-week moving average, which means I think there's value here. So last time I did this, I bought it when it got through the 200-week moving average. That was before I discovered this particular strategy. But it looked cheap back then. And I think it's starting to look good value now for Xero. But a lot of negative sentiment in this type of company. But I think the sell-off in the tech sector in Australia has been overdone. By the way, share price of Xero up 2.3% on Friday. And maybe that's the bottom. Nice 1-day candlestick on Thursday, by the way. Share price up 2.52, nice solid green candlestick. And look at the volume coming through. Gee, so maybe the bottom is near for Xero. So again, I think this all depends on your investing strategy or your trading strategy. Would you consider Xero to be a high quality company? This is how I look at it. Do I consider Xero to be a high quality company? Maybe not, but it definitely has that potential. So am I willing to hold it for the longer term? Yes. Am I willing to trade it? Yeah, I'm willing to trade it as well. So maybe that's what I might do. I do have a longer term hold position in this company, but I'm willing to trade it. But I don't have a buy signal when it comes to trading right now. So that means no for that. But if I do think this is a quality company, if you do think this is a quality company and you think based off the 200-week moving average, if you think this is a quality company, maybe now's the time to buy, even though daily chart looks horrible. I think it all depends. There's a lot of things you have to depend. And just acronym asked about REA Group continues to weaken under multi-year trend line. So this is another one very similar to Xero, where I do think this is a potential buy. I would have trouble arguing against this being a high quality company. I would, so I would say this is a high quality company. I do like their expansion into India. I think that is a potential really high growth area. And if you have a look at the 200-week moving average where the share price is, it's right there now. So share price is at $182, so just below the 200-week moving average. If you go through history with REA Group, this is a time to buy. Go through. In fact, the share price remained above the 200-week moving average from 2009 all the way through to COVID-19. For 11 years, the share price was above the 200-week moving average and has only dropped below that moving average, COVID-19, during the tech sell-off because of interest rates rising, and that was a great buying opportunity, and also now. So, and the other thing is, and who was it? Scott Phillips. We have sold out of our REA position because the P/E ratio is too high at 100. And I was thinking, you do recognize or realize there was a one-off, which means the profit last year was way below where it should have been. And now the P/E ratio of our REA group is like 38, 36. P/E ratio of REA Group is 36 because they've got new results and the profit was actually a little bit more than it should have been because of one-off. So I found that really fascinating that someone just used a P/E ratio of REA Group to sell out when they didn't, I think, realize that there was a one-off. But maybe that's why share price was sold off. And I think this looks really good value. And it's in the P/E ratio, 1.34%. Or not the P/E ratio, the dividend yield 1.34%. That's going to grow. If you take a position now, the dividend yield on your initial capital will grow quite considerably. Now, there was that little bit of threat of Google getting into this space, but is that threat overblown? Probably. So thank you for that. It's just acronym. Probably, yeah. Under multi, this is another one where it all depends on your philosophy, your strategy. For me, high quality company, 200-week moving average, this is when you buy. I don't really care about trends, that sort of thing. If you look at the daily chart, it looks horrendous. But for me, whenever the share price gets below the 200-week moving average, the daily chart is going to look horrendous. Yeah, go back to 2022. Well, funny enough, when I bought, the chart was actually looking really good. That's probably why I bought. It was looking really bad, then I bought when the chart started to look good. Maybe you could do that. Could be as simple as that. When the chart looks a little bit better. Okay, KAU Malus, CSL, James Hardie, Reece, good barging price right now. Bargain, maybe good bargain price right now. I probably agree, maybe. So again, these three companies, I think CSL is a high quality company. I think the sentiment in CSL the negative sentiment is in CSL is so overblown that this is an absolute bargain. I think, and I do own CSL, so maybe I'm a little bit biased. P ratio right now is 18.37. CBA is going to grow at a significantly lower rate than CSL. CSL growth is going to beat CBA's growth by such a measure that people will look back and go, why would I buy CBA instead of CSL unless it's maybe the income? But even the dividend yield right now for CSL is 2.6%. For CBA, it's probably like 3 to 4%, 3.13. So you're not getting a significant return when it comes to dividends in CBA. But I can almost guarantee you, in 10 years' time, the dividend for CSL is going to be significantly more than it is now in percentage terms, greater now in percentage terms versus CBA. So if I put CBA and CSL next to each other, there's no way I'd be even thinking about buying CBA. But I think the negative sentiment in CSL has become such so negative to the point that I think the market has really overreacted. And I think CSL is almost a no-brainer right now. Maybe I should just add to my position. I think this is a no-brainer. And even if you have a look at the weekly chart, the last time there was such negative sentiment in CSL probably was during the tech sell-off back in 2001, 2002. Share price of CSL at that point went from $18 all the way down to $4. 18 to $4. You could have bought CSL for $4 back then. And I think that's what's happening with CSL right now. Even their forward-looking growth is really good. We're talking about double-digit growth. You're not going to get that with CBA. So anyway, so CSL, in my opinion, is cheap now. And we're going to look back in 10 years going, what a great time to buy CSL. Now, James Hardie is my most recent addition to my super. And I have for the longest time been umming and ahhing about this one as a high quality company. And I've got to the point where I think, yeah, if it's not a high quality company, I do think it is good value here with James Hardie. If you have a look at the weekly chart, share price is well below the 200-week moving average. And if you go back through time, share price has, increased over time. And I just think negative sentiment. The other reason I took a position in James Hardie for the longer term is they did release a positive announcement. They did release something positive. I think it was either the 18th of November or maybe it was the 26th of November. They did release something positive. And I thought that was probably the end of the downtrend, maybe. That was the bottom at about $25, which was a nice little support level. Reece is a different one. This one I have a little bit more. I'm not sure if it is on my high quality watch list. Let's have a look. It might be here. Reliance Worldwide is on it, which, oh, yeah, Reece is not on this list. I don't know why, but for some reason it's not on the list. And if I have a look at the chart, the weekly chart, it's sort of similar. Actually, it is similar to James Hardie. Share price is well below the 200-week moving average. But the last time I looked at Reece was way back in when the share price got above $28. And I just looked at the valuation and went, whoa, that's way too rich for me. So share price is more than half since then. And the P ratio right now is 25.85. So even though the share price is more than half, this P ratio is still a little bit elevated at 25.85. But based off the 200-week moving average strategy, and you consider this company high quality, this could be a nice time to buy. And they did release something positive. And we saw the share price want to break out, trying to break out. I do have this as a potential trade. Share price popped up on the 24th of November, 12.77%. We haven't seen any selling coming in. Share price is going sideways. I do like this little setup. And share price is getting very close to breaking above $13. Getting very close. So I definitely have Reece on my potential trades, but whether it's a high quality company, I'm not sure just yet. Might have to look at it more closely. Mr. Fantastic says you need to make a Kneppy's high quality company ETF. Wouldn't it be great if I could do that? How easy is it to create an ETF? So would you like an ETF? Let me go through my high quality watch list. Let me go through it. I do have a high quality watch list somewhere here. And ASX 50 companies on this list. So we've got Westpharma, CSL, Goodman Group, ResMed, Pro Medicus, Fisher & Paykel, Healthcare, Cochlear, REA Group, WiseTech, Xero, James Hardie, Solpats, Car Group, Technology One, Hub24, NetWealth, Pinnacle, NIB, Generation Development, Objective, Data3, Fiducian, Pacific Current, Breville, SGH, Reece. I do have Reece on my high quality watch list, by the way. So Reece is in my high quality list. There you go. Steadfast, AUB Group, Infratil, Ventia, Aristocrat, Lavisa, Brambles, another one, which I'll be umming and ahhing about, ALS, Coden, Reliance Worldwide. Some of these I have in the list, but I'm a little bit skeptical whether or not they belong. This was developed based off my screener, and then I've added it with other companies as well. Super Retail, ARB, Nick Scali, Mass Group, Supply Network, Genusplus, which funny enough, I am trading, and I wouldn't consider Genusplus as a high quality. Anyway, we can keep on going. So quite a few companies in this list, including Seek. Oh, that is the one I've recently added. Seek. There you go. For some reason, TradingView is slow. Anyway, I would love that ETF because it's in my, there's all high quality companies that are on my own watch list. So I'm a little bit biased. Oh, just acronym. Dear Santa Neppy, please suggest one good stock Santa would buy for 2026. Thank you, Santa. And then Astronomics says, I might get banned. ASX says, no, I can't make recommendations, which is true. I had a lot of people saying 3 years ago, you should end this channel. ASX is coming after you. No, they're not. They're not. ASX is not coming after me. I actually did ask ASX whether they would come after me, and they said, no. They actually said, get your own legal advice, but we don't care. Well, they didn't say that, but I got that sort of gist from the email. Anyway, here's the problem. I think I've mentioned this. So 1 year period, it's going to be really tough to make. 1 year period is just luck. What happens to a company share price over a 1 year period, to me, in my opinion, is just luck, particularly when you're looking at exactly 1 year period. So from January 1st to January 1st, it's just luck. A company could release the most powerful announcement on January 3, and then share price could go up 500%. And it's just luck. So I just think these are foolish games, but I still do it. I'm still going to ask you your picks for 2026, and I'm going to still pick companies I think will do well in 2026. But I'll be honest with you, I won't put much time and effort into that. It will be just luck. And might just have a look at some charts, have a look at share prices of the companies, look like they're starting to go up. So that's it. So I can't give you one stock because I have no idea over a 1 year period. Okay. So what I might do is, what I might do is, I'll give you one. I'll give you one. I'll give you one. Um, and depends on what I'm going to give you one. I'm going to give you EQR. I'm going to give you EQR. I do like this chart for EQR. I'm going to give you EQR. That is my stock pick for 2026, but it is not a buy suggestion. It is not a buy recommendation. That is just for SHITs, S's, and giggles. That's it. Nothing more, nothing less. Digi 0422. Oh, this is a good question. I'm curious how you decide to buy one stock over another just based off the chart. For example, AGY, is that a go? I forget that what it is, has done a lot better than Core Lithium over the last month. But if I'm not mistaken, you chose Core Lithium even though you had seen both charts at the same time. I'm trying to understand the thought process as a novice. I think the way to answer this is if you have a look at both these charts, Argosy, that's it, Argosy. Beautiful chart. Beautiful chart. And Core Lithium is a beautiful chart. So I don't think you can go wrong. And I think you are, yeah, it's a beautiful chart. And a lot of lithium companies are beautiful. So for instance, I chose Gallon Lithium, which is my most recent lithium trade, over Lake Resources. And I think it's just, so why? I think it's just I would consider Lake Resources to be a little bit more risky than Gallon. And I think it all is based off my own risk appetite at that point in time. And also the share price of Lake Resources just took off suddenly back in November, 13th of November, 12th of November, just took off suddenly, just went crazy all of a sudden. So there's a lot of different reasons behind it. One of the reasons I took a position in Core Lithium was because of a positive update. They were announced to the market well before the share price broke out. That was on the 14th of May. I did like that announcement on the 14th of May because it was about their project in the Finniss River. And the other thing is, I do know a little bit more about Core Lithium than Agosi, and that's also plays a part. So with Agosi, I know very little about that company, but with Core Lithium, I know a little bit more. And I just think you couldn't go wrong with either one based off the chart. So just all these little factors that played in. In hindsight, yeah, Agosi share price broke out on 3rd of July. So they released something around then. And that was the time to get in, Agosi. But you couldn't go wrong with either one at this point in time. So the way I look at this is there's a lot of opportunities on the market, and sometimes you just say, hey, I like this one a little bit more than this one. Sometimes that decision will be wrong. And I don't think you should dwell on it. Don't dwell on it. Just don't dwell on, should I buy this one versus that one? Sometimes if I'm trying to make a decision between two, I just buy two of them. So typically what I'm looking for is shifts in trend in the share price, sentiment. I'm looking at announcements. And sometimes I don't have to make choices. It's pretty obvious that I should just take a position in this. And for Argosy and Core Lithium was just based off the very fact that I knew Core Lithium a little bit more than Argosy. Probably a lot more. Proteomics, this is another one I am trading right now, trying to break out of 3-month resistance above 50 cents. This stock has been quite buoyant lately. Someone is accumulating, I suspect. Well, I'm part of that. Well, actually, I'm not accumulating. They have strong science and have done the hard years to get commercial products, potentially entering the payoff years now. So this is another one where I just took a position. I don't know anything about the company. They must have released something because I remember this chart. They released something and this is exactly the chart I'm looking for. Share price in a downtrend. And then all of a sudden, shift in trend and sentiment on the 26th of November. And then we had confirmation on the 2nd of December. And then that confirmation was tested. You can see the share price pulling back, tested the breakout, and then just took off just after that test. Now, the share price did pull back 6.42% on Friday. That's okay. That's fine. But this is a beautiful chart. So yeah, this has been a successful trade so far. EQR has been another successful trade. You know what has not been a successful trade? Which one? I have a few here. I've already sold out a few unsuccessful ones. Bass Oil. I just took a position in Bass Oil. And I thought, oh, but the share price has pulled back a little bit further than I thought it was going to. But this has not got to the point where I'm going to sell out of this one just yet. I need to see a rally in the share price, however. So it doesn't always go in the direction you hope. Sometimes it goes a little bit different direction. And then it gets to the point where you have to think about selling out. So Proteomics is another one, small cap trade, risky trade. We'll call it that. But with potential significant upside. That is the reason I'm doing this. Potential significant upside. I want that 500%. No, I want that 1,000. No, I was going to say 1,000 bagger. That's a little bit overdoing it. I definitely want a 10 bagger, but I'm looking for a 100 bagger. And I think this is the way to get it. Anyway, VBED, it looks like the ASX will not have a Santa Claus rally this year. Sad. Yeah, let's go to the XJO. Yeah, anyway, what I was thinking of doing, yeah, there's no Santa Claus rally yet. And I don't think we're going to get one. What I could do is I might do a ChatGPT. Why not? I'm going to talk about ChatGPT in a second because there's another sort of comment in relation to ChatGPT. Santa Claus rally stock market, how reliable? Or is it bogus? Or is it bogus? We always hear about Santa Claus rally, don't we? There's all those other sayings like sell in May, go away, or something like that. Anyway, I never listen to those sayings. So Santa Claus rally is a real historical market pattern, but it's not a guaranteed. Of course, it's not guaranteed. Nothing, when you talk about the future, nothing is 100% guaranteed. Not guaranteed or highly predictive strategy, more of a seasonal tendency than a reliable trading rule. Okay. Santa Claus rally refers to a specific period in the stock market, the last 5 trading days of December and the first 2 trading days of January. There you go. I had no idea. So we're not even in that period right now. So maybe we are going to see a bit of a rally in the last few days of December and first few days of January. It could happen. We have seen a little bit of shift in sentiment when it comes to tech. When stock indices have often risen historically, it was first noticed by Yale Hirsch in Stock Traders Almanac 1972. On average, the S&P 500 has grown modest gains over this period, has shown modest gains over this period around 1.1 to 1.3%. That's very modest. Historical markets have risen in this window roughly 70 to 80% of years. There you go. But is it reliable? Yes, statistically, it has shown a bias. It is not a guarantee. Recent evidence, 2025 example, as of mid-December 2025, the expected Santa Claus rally has not shown up. But based off what you said, we're not even in that period. Anyway, Think of the Santa Claus rally as a historical quirk, one that has shown a modest positive bias more often than not, but without strong predictive power. Treat it like a fun calendar indicator, not a strategy you'd bet big on. Yes, I'd probably agree with that. Go ChatGPT, because we have some negative comments about you soon. We'll be commenting upon. Okay, True Poacher says, do you think the difference between USA tech and Australian tech is that the USA interest rates looks like they're coming down and in Australia interest rates look like they might be going up next year? I think that might play a little bit of part. I just think it was really bad negative sentiment when it comes to some of our bigger companies like WasteTech, Xero, and I think that played a part. I also think valuation. Australian tech companies were valued quite richly compared to USA tech. You might be surprised that USA tech companies, the Mag 7, aren't that richly valued. We're talking about PE ratios in the 30s, which is not that much. In fact, Alphabet PE ratio, when I bought it a few years ago, was 18. 18 for Alphabet. And at that point in time, there was a fair bit of negative sentiment about Alphabet, and the share price has more than doubled since then, if I remember correctly. Let's have a look. Alphabet. I'm pretty sure it's more than doubled. Can't even spell it. In fact, why am I just Google? Not Google, but it's Google. Yeah, jeez. So when I bought Alphabet, yeah, there was so much negative sentiment about this company. I was going to lose the AI race. ChatGPT is going to take over the Google search. What's happening with? There it is. Yeah, so I bought this one back in September 2022. So I'm talking about over 3 years ago at $98. Share price now is over $300. So it's been a nice three bagger for me. This must be one of my biggest holdings, by the way. Anyway, you can see when I bought it, share price was in a well-defined downtrend. Didn't quite time the bottom. That's not the, you're not going to time the bottom. Uh, but there was negative sentiment in this company, and the P ratio at that point was pretty sure about 18. Now it's 30. It's not that richly valued. It's not like 100. And I think some of the Australian tech companies, like WiseTech P ratio, is still like 70. It's just a different valuation. Although in saying that, there's more potential for more significant growth in Australian tech companies because they are smaller. But I think definitely interest rates play a part. Apparently Telix price dropped on some rumor, according to Dev Shaw, being dying over and over again. This quality stock for ages. They just released an aftermarket announcement addressing the rumor. Might bounce tomorrow. I don't even know what's happening here. The people still holding it. I hope it provides them with some return on this news, but pretty sure this has turned for the worst a while now. Short traders will admit a mistake. Long term, people will claim it's all okay. It will rise again. Hope it works out before involved. I wonder if it will reach its peak. Same with Mesoblast, Clarity, and Loomis. Let's have a look at Telix. So this is a company I do own, but it's in my super, so I'm not even thinking about trading it. I might add, I might trade it if it starts. Oh, it has gone ugly the last few weeks have gone really ugly. But look, if you look at the chart, it's in a downtrend. And I heard directly from a manager, oh, we're selling Telix because the trend has turned negative. That's the only reason they sell it. And so it's sort of like a self-fulfilling prophecy here. Trend has gone down, we are selling. So a lot of fund managers like that. We are selling, trend is going down. When the trend starts going or turning, trend will start turning around. So that is, I think, exactly what's happened with Telix. It's just negative sentiment in this company right now. Trend has turned negative. Would I classify it as a high quality stock? I probably wouldn't go that far just yet, but if you do, share price has slipped below the 200-week moving average. But I'm not sure if I would classify Telix as a high quality company just yet, simply because I need to see more. Uh, I need to see more products they're selling. Put it that way. I need to see my diversified revenue streams. It's as simple as that. But it has the potential to be a much bigger company in 5 to 10 years. There is that potential, and that is why I'm just holding it. Some people have said, oh, this might be the next CSL. It has the potential to be the next CSL on the ASX. That is one of the reasons why I'm holding it. And if you have a look at CSL, there was times when CSL share price dropped a lot. It went from $18 to $4 back in, I think I've already mentioned this. Yeah, 18 to $4 back in 2020, no, 2001, no, yeah, 2001, 2002. Anyway, by the way, what happened? So this is what I find when it comes to my super holdings is I don't really follow them all that closely. Prost ACT Global Study Status. Yeah, I saw this and I just moved on. I don't see any reason why the share price has dropped. Okay, John Thankotos. Cheers for your work, Kneppy. Could you please check out the chart for CTT, Cettire? Would you consider this to be an uptrend confirmation? Interesting, revenue is currently shaping up to be similar to when share price was an all-time high. So this is an interesting one because sentiment has definitely shifted with Cettire, not on the weekly chart. On the weekly chart, this is a trading stock. In fact, this is the perfect trading stock. So yeah, I think this is definitely so the interesting level for Cettire would be just there and has remained above that level. So we're talking about 87 cents. And the share price of Cettire right now is at 87 cents. So it's right on a support level. And this could be an interesting trade because there is potential significant upside with Cettire. There's also significant downside. So there's way more risk with this one. But the upside in this one, you can just see, look at this. This is a weekly chart. Share price went from 50 cents to $5, back to 50 cents, back to $5, back to 50 cents. So will it go back up to $5? It might. So for me, I don't care about the revenue, that sort of thing. For me, this is more of a trading stock. Definitely not a high quality company, more of a trading stock. And you can just see that with the weekly chart. So this is a potential trade. I do actually don't mind this chart. And the reason I don't mind it isn't because it's mostly because the share price had popped up and then the share price has gone sideways. So all the selling there's no selling. Well, there is selling, but the enthusiasm of the sellers is not outweighing the enthusiasm of the buyers right now. And that's important. So I don't mind the chart. I do like the chart. Boris, greetings, Deppy. When time permits, can you take a quick look at Centrepoint Alliance, CAF, and kindly share some insight shares? I don't know anything about Centrepoint Alliance. No, I know nothing. Absolutely nothing. So let's have a look at Centrepoint Alliance. Is it? Oh, they released a training update. Did I miss this training update? 16th of 12. I can tell you right now if I missed it or if it was not relevant. I did not put it down. So for me, this was not all that relevant. Forecasting EBITDA. So this company is a real company. They make money. EBITDA of 6 million, forecasting EBITDA 6 million, 13% increase on first half financial year 25. I'd say there must not have been a reaction from the market. Oh, there was a slight reaction. Nice volume coming in that day. That's probably significant. Strong organic growth, number two license in the market. What do they do? Offers a range of financial services to financial advice firms and customers throughout Australia. Company operates 5 core business lines: licensee services, financial advice, investments platforms, and lending. So there is a lot of companies like this on the ASX, and I actually do own a few of these companies. And so I'd say the moat with Centrepoint Alliance is not that strong. Um, yeah, that's probably the first thing I'd say. I'm just going to have a quick look at CAF. Oh, how big is this company, by the way? Let's have a look at where is my market index? Yeah, market index. I'm just going to have a look at the market cap of this company. $80 million. It's a fairly small company. So even though this is a dime a dozen company on the ASX, is that the right saying? These means there's a lot. I don't mind if a company, if there's a smaller company in this sector because they have more potential to grow. They have more ability to be more agile and grow than the bigger companies. So markup of $80 million is not a deterrent for me. In fact, it's an attraction for me. So Centrepoint, maybe it's just a name, Centrepoint Alliance. Anyway, so let's have a look at how this company has performed financially. In fact, let me see if this is on my. I was going to see if it was in my high quality list. There are quite a few smaller companies, and I typically ignore them when it comes to high quality because they are smaller. Revenue growth 20.1% over the last 5 years, 12.7% over the last 3 years, tick, tick. Earnings per share growth all over the place, 12.1% over the last 5 years, negative 10.5% over the last 3 years. Could be one off there, which has driven that negativity. Margins really low, but, and that probably shows you there's not much of a moat. They don't have much of a distinction against other like companies, but they could grow those margins. Return equity and return invested capital, really nice. So at 22 and 17.4%. We have a look at, just gonna have a quick look at this. Financials, total revenues, and I'm just gonna have a quick look at profit. So let's see if there's one like a one-off. Yeah, profit has been positive over the last 5 years, but it has pulled back the last few years. So, and before 2020, it was up and down profitability. But you can see the revenue, 326 million, $5 million profit straight away. Low margin business, which means if this company does struggle over a short period of time, any sort of year, even a whole year, even if they grow revenue, those margins, those low margins could mean this company is unprofitable. It doesn't take much. That's why I'm not a big fan of low margin business, because the smallest thing could drive the company to unprofitability. So definitely wouldn't put this company into the high quality basket. So let's have a look. They probably have to prove a little bit more to me. The chart. Let's have a look at the weekly chart. I don't think there would be much. Yeah. In fact, this company experienced something really bad in 2017-18. Share price dropped like a rock. Now, in the weekly chart, share price has been slowly going upwards. If you put the 200-week moving average here, yeah, yeah, yeah. Anyway, oh, the share price rose in the last week nicely. Looks like it's bounced. Oh, that's off the trading update. Share price was in a bit of a downtrend after or before that, and has bounced. So that could maybe shift sentiment. The volume was nice on that day, so maybe that could be a bit of a shift in the short-term sentiment. Anyway, so that's what I'm going to talk about when it comes to Centrepoint Alliance. Just like it says, COF up 5% before I could get my order in. So annoying. Is this the Reit Centrepoint? One of the not Centrepoint, Charter Hall Reit or something. Centuria Reit. Centuria Office Reit. Okay. I have no interest in this. Zero interest in Reit. Well, I shouldn't say I have zero interest in Reit, but I have very little interest in this particular Reit. I doubt even they probably have a nice dividend yield, maybe. Maybe. Let's have a look. Dividend yield 8.63%. Yeah, it's pretty nice. And I think that's the only reason I would ever even think about buying this is because of a nice dividend yield. If you'll have a look at the long-term chart here, oh, share price has gone down a lot. I'm just going to have a quick look at their NTA. COF, I'm already there. Let's have a look at their NTA. What if they put it into the operating update on the 30th of October? Let's see if they have an NTA here. Let's please have an NTA here. No, they don't. They have guidance, FFO guidance 11.1 to 11.5 and distribution guidance of 10. So maintaining a nice dividend yield. So the market is saying not much growth in this company at all, which is sort of understandable. I'm just going to have a quick look at the NTA. And they should have it in their financial announcements on the 15th of August. It's one of the things they should list here. Oh, net tangible assets, NTA, yeah. $1.67 and current share price is $1.16. So they're well below NTA. But so you could say there's value here, but are they going to grow all that much? Yeah, nice dividend. The only reason I'd buy this is nice dividend yield. That's about it. And I have done this in the past when I have seen a company with a nice dividend yield and I like the chart, I just take a position because at least I get a nice dividend yield. But you also, if the share price appreciates, you get a capital gain plus dividend on top of that. I've done that with APA Group, Horizon, particularly APA Group had a really nice dividend. I went, oh, if the share price keeps going up, my returns are going to be really good. Anyway, so I have no interest in COF. By the way, share price went up 5% in one day. It did 4.93%. Oh, it's probably bounced off a nice support level. Oh yeah. So there's a nice support level at around those levels. So just above $1.10, say between $1.10 and $1.13. Really nice support. If you have a look at the weekly chart, oh yeah, it goes back even further. Okay, so I can sort of see why you might buy this one at that level, and then it bounced. Hmm. Okay, I can see it. Just a second, IFT Infratil is pulling back, getting ready to jump on. And then Can's boy says at $8 question mark. Let's have a look at Infratil. Funny enough, I've never really thought about this company's high quality, but every single time when I look at the weekly chart, I go, this is a chart of a high quality company. Let's have a look at that right now. Weekly chart, Infratil. This is a chart of a high quality company. Now, it only goes back to 2018. And share price back in March 2023 during the COVID-19 dropped below the 200-week moving average for a very slight period of time and then bounced. Share price of Infratil dropped below the 200-week moving average in April 2025, then bounced and has bounced off it again almost perfectly in the last week. It's uncanny. And look at the volume. So it looks like someone just went, oh, this is good value. And the daily chart looks terrible, but it has bounced off that and it bounced off it on Thursday. There you go. So if you have a look at the daily chart, you just get a different perspective, don't you? Daily chart looks meh, but the weekly chart, based off the 200-week moving average, looks completely different. I get a buy signal, in fact, for Infratil. So if you like Infratil, maybe now was a time to buy. Not today, because the market is not open. Oh, here we go. Gav on YouTube says ChatGPT uses HotCopper analysis. Roger Dawn says it's a bit of a turnoff. And then Gavon says, yeah, can't trust ChatGPT now that I know that. I am going to support ChatGPT here because it goes through all sources, So what it finds on HotCopper is not what it's going to show up. In fact, when you do have a look at ChatGPT, you can actually see they use where they got information from. And on occasion, I will have a look something up on ChatGPT and it will say the HotCopper stuff. So you can see what it got from HotCopper. And it doesn't really get that much. I'll be honest with you. It doesn't get that much. And the way I look at this is I go to HotCopper on occasion. So will you judge me because I go to HotCopper? Sometimes I will go to HotCopper and just have a look, go, oh, this is interesting, but I don't really draw all that much from HotCopper, just like ChatGPT. So I'm going to support ChatGPT and say, hey, just because it does go to HotCopper, it shouldn't be a turnoff. And I think, to be honest with you, something like ChatGPT should go to every single source it can. Maybe not me. I shouldn't go to every single source because I don't have too much time, but ChatGPT has the capability to go to all sources, and I think it should. And I think the most important thing when it comes to ChatGPT, it does put the source here. So Wikipedia. Lots of Wikipedia for Santa Claus Rally, Smart Asset. And all you have to do is hover your mouse above it. You can see when the article or the information is from. So Smart Asset is account Santa Claus Rally Real 2020 study, SearchGate, Santa Claus Rally in US stock market returns, Kiel University. So this must be a bit of research maybe. According to Economic Theory, December 17, 2021, Market Watch, Barron's, another Wikipedia, Fisher Investments. So it's very important to know exactly where ChatGPT got the information. I just like how ChatGPT puts all the information into something that's really readable. You can't do that with Google. Anyway, so that's the negative stuff on ChatGPT. Gone. Blacktop Images says, check out CTI Logistics breaking out. Well, I did mention that, didn't I? I think. So I have taken a trading position in CTI Logistics, and I'm pretty sure I mentioned this in the video. When would I have mentioned this? I can tell you. Why is TradingView slow today? It broke out on the 16th of December. And 16th of December, so that's right. CTI Logistics was the number 2 stock of the day, just behind DroneShip. And this is the reason why. And there's me taking a position at 223, just because of the chart. That's it, the chart, a breakout. Exactly what I'm looking for. Doesn't mean it's going to go my way. Doesn't mean the share price will keep on going up because I'll be successful. I'm successful about 70% of the times with these sort of setups. So yeah, so the main thing is just stick to your plan. If the share price drops below $2, I'll sell out. Okay. Oh, a lot of replies here to this particular comment from Boss Energy, Ben Hutchinson. Close readers of Kneppy's comment section may recall I bet on a Boss short squeeze some months ago. I vaguely remember that. Today is further pain in that disastrous miscalculation. Ouch. Paper loss of 51% of capital invested in Boss Energy at the moment. It did go up yesterday, by the way. It's a nice little bounce. My only consolation is diversification. Oh, so this is an endorsement of diversification. I no longer, by the way, I listened to a podcast with have I finished that podcast? It was Shares for Beginners with Richard Lemming. Shares for Beginners with Richard Lemming. I forget what he runs. And he was really on about diversification, how important it is because of what Ben Hutchinson is saying here. No, I no longer let any single stock or idea go beyond a few percent of total portfolio size, including Boss Energy. Thank goodness. I used to get more concentrated early, eventually learned not to. Of course, when ideas work out, you always wish you'd gone bigger, but stock price trajectories are incredibly uncertain and the best protection is averaging over many bets. So I will say this. You won't get ultra rich by being diversified. So a lot of people, I've heard stories about this. Someone put all their money into one stock and the share price went up 1000% and they become ultra rich. But you don't hear the stories of people putting all their money into one position and losing all their money. And I've gone to HotCopper on occasion when I've seen the share price of a company go down 90% or maybe 80%. And I just want to have a look at all the people that lost a lot of money. And there's a lot. A lot of people get too concentrated, put all their money into one position, particularly a highly risk position, and they lose most of their money. And sometimes it's just luck. We have heard, hopefully you have heard, that Elon Musk with Tesla, if we went into recession, 2010s, Tesla would have gone bankrupt. And he's mentioned there's a bit of element of luck when it comes to that. So diversification, and I'll be honest with you, I am highly diversified, even with my trading. And the main reason behind that, I don't have ultra confidence. Don't have that confidence that one single position will do better than another position. I just don't have that confidence. I wish I did, but I don't. Anyway, so I think diversification, and you always hear, I think it's much better to be concentrated and diversified. But for me personally, it's diversification is better. There's a lot going on here, a lot of replies. Anyway, you can go through that because there's a lot here. I've never seen one comment get so many replies. Quick analysis of BlinkLab BB1. The only thing I know about BlinkLab BB1 is the chart looks stunning. I think it's this one. Yes, chart looks stunning. I saw this chart a few weeks ago and went, gee, this chart looks really good. But it never has popped up. Well, it's popped up on my chart radar, but has never popped up on my any other radar. So BlinkLab, which is disappointing. So there's a lot of opportunities out there and you're gonna miss a lot. You're gonna miss a lot. And this Blink one is one I've missed. Let's have a look at the most recent pennies 4C. And this will probably tell all why I've sort of stayed clear to this one. Yeah, they have this is pre-revenue. But with my new risky trading strategy, this is one that could have caught my imagination, particularly if they release something positive. So, and yeah, they must have released something on the 3rd of February 2025. Share price ran up 26% that day. And the chart since then has been absolutely stunning. I don't know anything about this company other than that. So there must be autism. Looks like they do autism stuff. Updated corporate presentation. I like these sort of things. This should tell us everything this company does. It should. Doesn't mean it will. It should. Just take your time, come sec. I'm no rush. By the way, actually, I won't say anything now because it's just about to open. Early and accurate diagnosis of autism and ADHD, introducing an AI-powered smartphone platform for neurological testing. Ooh, not sure if I absolutely like that. Market cap is 114 million. Ooh, I'm not sure if I like that. What is autism? I think we know. USA economic burden of autism. It's a lot. Our NDI payments for autism is over $9.9 billion. But how helpful would that spending be if it came to early diagnosis? Because you can't cure it or anything, just early diagnosis. Early diagnosis and intervention helps children to develop crucial. Okay, thank you for answering my question. Help children to develop crucial skills and reduces long-term support needs and costs. Thank you, BlinkLab. Okay, so that's what they're trying to do. But how close are they to getting something across the line? Anyway, so thoughts on BlinkLab? Chart is spectacular. We have seen a bit of a dip in share price, gone from $1.08 or $1.10 back to 80 cents. Is that a time to buy? It's in my sweet buy section or buy area, sort of between the two moving average. You've seen in the past when it's done that, that was nice buying opportunities. So that's all I got. Other than I don't know much about the science, and I'm not going to delve deeply into it right now. Oh, this is about RAS Technology, who says the loss of the state contract was no big deal. It's no big deal. And then Bun Hutchinson says if you go back 2 years ago to when they won the state contract, they described it as making a material difference. The thing I can forgive or can't forgive is that directors were selling in the fortnight before the loss of contract announced. Were they? If they were, that looks nasty, and there should be an investigation. Oh, look at that. They were. Gary Cringe. Yeah, they were selling stuff. Oh, that's nasty. Uh, so you say they won the contract. Wait there. I'm going to just Google this. REST Technology won state contract. I just want to see what? Oh no, RAS Technology. No, no, no. I want the announcement where they won. No, no, no. When did they win a state contract? 2 years ago. Was it 2 years ago? There we go. January 22nd, 2024. So January 22nd, 2024. The reason I'm doing that is I can go back 2 years ago, January 2024. Here we go. Stake partners with RAS Technology to launch horse racing globally. I wonder if this was a breakout for the company. And let's see the commentary from the people of RAS. They mention the contract has the potential to be the company's most significant to date and is for a 2 year period. Yep, we knew that. Let's see what the commentary says. So, Stephen Chris, the RAS CEO. Du-du-du-du. Okay, so yeah, there's nothing saying this is. Yeah, they did say significant. They did say significant. In fact, commenting on the significance of the stake. So it is significant. So they were really downplaying this when they lost it. And now they're saying, yeah, so they have changed their tune. But I think the major story about this is director selling. I'd say they would have known. They would have known. So that is a bit dodgy. Dodgy. Bradley McDonald, a few comments from Bradley McDonald. First of all, what a lovely day. It's always good when you look at your portfolio and it's massively in the green. It's also better when you look at portfolio and it's more than double the market returns. That's a really good day. Anyway, uh, he also said it was a smart decision selling Treasury wines as much as I believe it is value. I took the opportunity to bail out after the market didn't react as negative as expected after trading hot. I don't want to gamble against a downtrend. At this stage, it's too risky to touch. Yeah, the problem with me, with I have, there could be value here, but the chart is in the well-defined downtrend. This could be the low. This could be the low. This could be it. And maybe it is the low, and lots of maybes and ifs. Maybe it is a low, maybe there's value here, but I need more confidence. And the only way I'm going to get confidence is either they release something positive or we start to see a little bit of shift in sentiment and the trend in the share price. And the share price could be higher than it is now. Could be like $6 at that point, maybe 6.50, 7. But there's another possibility here. The share price could keep on dropping. They could keep on releasing negative announcements. And I just look at the chart and go, no way for me. That's me. And I would not consider Treasury Wines to be a high quality company. So I don't even look at that side of the equation. And just for SHITs and giggles again, let's have a look at the weekly chart for Treasury Wines. And I don't think this chart is a high quality company's chart. It looked really good for a period, but since COVID-19, since 2020, in fact, the big drop in share price was January before COVID-19. That was when to get out. And since then, share price has gone from $20 to $4.89. This is not the chart of a high quality company. Anyway, so I agree with everything Bradley McDonald says there. He also says, this is why I love the stock market. After being down 18%, after being 80% down with taking my chance with Treasury Wines, I'm up 30% on the two stocks I invested the funds into. The wound is already healing thanks to Mr. Market. And this is true. There is an opportunity cost. And I've already mentioned this early in the video with Genusplus. I could maintain a holding, but there's an opportunity cost because I could take those funds, which is a lot of funds because it's one of my biggest positions right now. Share price has gone up so much. I could take those funds and put into charts that are looking better. And maybe I could get a really good return out of those companies. And then that could compound over time. So there is an opportunity cost. And thankfully, Bradley McDonald has pointed that out with his amazing comment. Awesome comment. Hills District says, can you review chart and recent news of McMahon on the ASX? MAH. The one thing I do know about McMahon, this chart is spectacular. I've always mixed, this is the weekly chart. We'll go back to the daily chart. Daily chart looks spectacular. Oh, it's just share price keeps going up. The time to get on this one really was probably back in August, not that long ago, by the way. The share price was 36. Share price has almost doubled since then. And you can just see that this company before now has been sort of in the doldrums, not much doing much. In fact, if you go back to 2012, if you have a look at the weekly chart, I don't know why TradingView is so slow today. Oh, no, it's not that. This is not the chart of a high quality company. This company's share price was significantly higher than it is now back in 2007 and 8. So I'd say this is more of a cyclical company. I'm pretty sure they're mining services, that sort of thing, which would make sense because there's a lot of, what's the word? There's a lot of potential in this sector. Now, they've released a few announcements recently that were not considered price sensitive. Decmil awarded $81 million Brockman expansion project, $51 million wind farm project. McMahon executes 792 by win contract. Here's a presentation. I always like presentations. So mining services presentation. Yeah. So I always think of McMahon as mining services, but I always mix up this one with another company. So I've always thought of McMahon as servicing coal sector, but I think that's another company. I'm trying to remember what that company is. Service mining, underground mining, civil infrastructure. Oh, that's right. They bought Decmil. So service mining. Yeah. So mining services, cyclical, just like mining is cyclical. And right now, I do like the very fact they've got a capital allocation strategy slide here. I love that. Anyway, guidance looks pretty good. Low margins, which is what I expect. And that's the thing. When the tide turns against this sector, you're going to see those margins contract. And those would be the time. That would be the time to get out. Now is not the time to get out, I think. The chart looks really good. But don't forget, and I would say this is not a high quality company. So I would not be owning this for the long term. But they're winning contracts. The other thing is, see, Hills just wanted me to mention recent news. They've been winning a lot of contracts. That's good. If you see contract after contract after contract win, that's good. There's a lot of energy in this space. A lot of forward momentum, not forward momentum, a lot of momentum in this space. Mining services is one of the sectors to be bullish about right now. Hi, David Chen. Hi, Kneppy. Would you be able to share your thoughts on Chalice mining and chart of South Palladium? Chalice mining. Okay, this is both charts. CHN, first of all. I think this one popped up on my radar the other day. So I'm not going to look at the weekly chart, just the daily chart. Yeah, this one popped on my radar the other day, and whoo, share price has gone off the last few days. So share price pulled back. Can't remember why it popped up on my radar. Did they release something? Oh, that's right. This Gonaville Palladium Nickel Copper Project PFS. So that's why they popped up on my radar. And for some reason, share price has popped up the last few days. Now, it's not the best looking chart. You can see a fair bit of volatility here. Share price was higher not that long ago. So just based off that, this wouldn't be at the top of my list. It's nowhere near the top of my list in terms of potential trades, but it did pique my interest because of that PFS. Palladium, nickel, copper. That's right. I was thinking this is just a gold exploring company, and then I saw this palladium, nickel, copper, and I went, ooh, that's interesting. The other one was South Palladium, SPD. I've never heard about this company, but it's palladium, and palladium is doing really well right now. So I think it's very important to look at the palladium chart. So let's have a look at that right now. Palladium. Oh, it's a beautiful chart, Palladium. It's really gone off the last week. Well, Palladium's had an absolutely spectacular week. Up 14.9%. In fact, the Palladium weekly chart and the daily chart are both bullish. They are both really bullish. I should be a little bit more excited about Palladium just based off what I've seen on the daily and the weekly chart. This is a beautiful chart. And you can just see with Palladium, no, SPD, it's going off, isn't it? Southern Palladium chart is spectacular. Share price up. What was that? 25.23% on the 19th on Friday. Did they release anything, or is this just increase in Palladium? Yeah, it's just increase in Palladium. So I wonder what Zimplats is doing. This should be up a lot too. I should get more Zim or more Palladium plays. If you have a Palladium play, send it to me. Although, you know what I could do instead of doing that? What are some Palladium plays on the ASC? This works. Southern, all that first company that pops up is Southern Palladium. Then Chalice Mining, which is, yeah, there we go, Palladium. So I thought this was just gold, and then I realized they're more diversified. So that's why Chalice Mining share price has popped up, is because of Palladium. Podium Minerals, Galileo Mining, Global X Physical Palladium. There's an ETF. There you go. Australia isn't a major primary palladium producer like Russia or South Africa. Most ASX players are. What about Zimplats? I think you missed that, dude. Oh yeah, there you go. Is not a pure palladium one. That's okay. Anyway, look, Palladium, Charles Mining and particularly South Palladium, Zimplats looks good as well. Just Acronym says HMC up 7% on huge volume. Could be the breakout we have been waiting for. Today is the last day before HMC drops out of the ASX 200. I've heard a lot of people mention about companies going in and out of ASX 200. I pay no attention to it. I'd like to see any sort of research that links the performance of companies to them dropping in or dropping out and getting into the ASX 200. And I doubt there's going to be any significant research that shows a company will significantly outperform. but I can be corrected if I see research. If I see research, let's have a look at HMC. So this could be the share price of this one has dropped a lot, and this is definitely on my radar. Yes, it is definitely on my radar. So we have seen a potential breakout. Oh, look at the volume as well. Massive volume. So thank you, Just Acronym. Although I would have seen this later in the day. This looks good. This looks good. In fact, you know what I'm going to do? I'm going to put this into my technical update video. Where is it? Video technical. There it is. Okay, Sensei. Can you tell us all who exactly is Takashi Kotegawa, also known as JCOM Man, also known as BNF? Actually, before that, Jack says or asks, can you do a chart on 29 metals? Let's do that first, and then we'll talk about Mr. Taka, whatever his name is, Takahashi. 29 metals, copper has had problems. Chart's looking good. Again, copper prices keep going up. So let's have a look at copper prices first. I have a feeling copper price or copper chart looks pretty good. Ooh, look at silver up 3.48%. I have a lot more exposure in silver than I do have in copper. But copper chart looks good, which means 29 metals is a play. And the 29 metals chart looks good as well. That's what I'm going to say about that. I always have a look at the underlying commodity and then have a look at the chart, and 29 metals looks good. But if the share price didn't rally back in October, it would look better right now. Now we go to Sensei's Takashi Kotegawa. Okay, so okay. Before I talk about this guy, I'm just going to mention this. I heard this a few times from experts. Andrew Page is one of them, who says, look, if anyone could give me names of people who become rich through technical analysis, I might change my opinion. And I was thinking of replying to that, actually giving him some names, because there are a plethora of names of people who have gotten dirt rich by technical analysis. And my problem with people like Andrew Page and there's some other guy, they aren't open-minded to check for themselves, to do the research themselves, because there's plenty of research of people who have got really rich through technical analysis. Ray Dalio, he started with trading. I'm not sure if he used technical analysis, but he was definitely a trader. The guy who owns Boston Red Sox, Henry, he got really rich through technical analysis. Jesse Livermore was another great name. But Takashi Kotegawa got dirt rich with not much capital. And I can almost guarantee you, Warren Buffett couldn't have got this rich in such a short period of time with this amount of capital. It would have taken him 5 times as long. So Takashi Kotegawa was a Japanese trader. He used technical analysis. He turned, oh, I'm going to get this wrong. He turned it was about $10,000 into $135 million in about, I think it was 15 years. And and the most amazing thing about Takashi Kotegawa is he believed that it was psychology. Psychology was the most important thing about trading. And I actually do believe that psychology plays a massive part, emotion, psychology. So what I'm going to do, because I probably messed this up, is bullet points. And I'll just see how right I was, because I looked at this guy many years ago. There we go, 13,600 into 153. I was fairly close. Okay. Retail stock trader, BNF, most famous individual traders in Japan. So again, how many years was this? For some reason, I'm thinking 15 years. And I can guarantee you, there is no investor like Warren Buffett who could do the same. And there's a plenty of stories of technical analysis people who have turned a little bit of money into a lot of money. I'm not one of them. Mid 2000s Japanese stock market boom. Really, mid 2000s Japanese stock market. There we go. Statistics at university. Made billions while many professionals were wiped out. Here we go. Yeah, focused on price action, order flow, market psychology. I think that was the most important thing. Market psychology trades what the market is doing, not what it should do. Strong emphasis on risk management, position sizing, cutting losses quickly, which is really important in my opinion. Mythical figure, etc., blah, 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 blah. No, I don't want to do any of that. And look at that. Jesse Livermore, pure poor Tudor Jones. Yeah, Jesse Livermore. I can't believe people go, I don't know anyone who became rich from technical analysis or trading. There's so many people out there. In fact, I want to do that with training or ChatGPT right now. And who has become rich using technical analysis? And I do know that Andrew Page uses ChatGPT because he just says it all the time. And all he has to do is just ChatGPT it using, but I believe, pretty sure he's stuck in his ways and he just can't see outside the box. And he's just not, it doesn't have that open-mindedness to delve deeply into this space because it is successful. This strategy or this type of this thing, technical analysis or whatever you want to call it, it can be highly uh, bountiful if you know what you're doing. So I'm going to see how many names pop up that I've heard of and I've looked at. Yeah, let's have a look. Jesse Livermore. I think this is probably the most, and I still can't believe people have never heard of this guy. His story in itself, I can't believe there hasn't been a movie about this guy. The very fact that he's committed suicide in the end, he became rich time and time again using technical analysis. Then he lost all his money, not because of technical analysis, because of he had faith in the wrong people. Market is never wrong, opinions often are. Paul Judah Jones, yeah, I've heard of this guy. Uh, so some of these I've never heard of. William O'Neill, yep, I've actually got his books. Turtle Traders, we've all heard of, hopefully you've heard of these guys. Um, more names. List of names. I should say list, just a list of names. Richard Dennis, yep. William Mecca, Stanley Druckenmiller, yep. Yep. Marty Schwartz, Nicholas Darvis, yeah, you've got Darvis box. So some of these I haven't heard. List of names uh, is what I want. Here we go. Yeah, John W. Henry, that's the one who bought Boston Red Sox. W's Ray Dalio's not here, but I'm pretty sure he did. Did Ray Dalio start off using trading? Did Ray Dalio get rich by trading? Maybe it was just trading. Pretty sure he started off trading. Oh, there you go. Okay. Well, you don't like. Yeah, I don't. No, for some reason, I always thought of Ray Dalio as someone who got rich by trading. But the guy who bought the Red Sox, John Henry, buyer of Red Sox. So he bought Red Sox because he became highly rich from trading or using technical analysis. I'm pretty sure he used futures, maybe. I might be getting outside of my expertise area. Get rich by using technical analysis. Let's see what it says. Yes. Systematic technical trend following, not discretionary stock picking. Before buying the Boston Red Sox, made his fortune in the futures market. Yeah, futures. Yeah. Trading futures, use price, trends, breakouts, volatility, and risk sizing. Yeah. So whenever someone says there's no one became rich from trading or using technical analysis, there is a plethora of people. It's just people are really closed-minded to this sort of thing. They believe that technical analysis does not work, hence no one became rich from it, but it's wrong. It is wrong. There's a lot of people out there who became rich from technical analysis. And you notice that Mr. Takashi, whatever his name is, he's not on this list. There's a lot of people who became rich from technical analysis. So whenever you hear that, and I have heard it many times from listening to Osbiz the Core, from Andrew Page and what's his name, Scott Phillips, that he said it. He just said it not long. He said it not that long ago, and I actually had to turn off the podcast because I couldn't listen anymore. Anyway, that is all I have for this particular answer reply video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.